Good morning traders, it's Carlo from Blueberry and welcome to a shortened week ahead. What is topical right now? Well, it's the continued peace talks between the US and Iran. We did have some tensions over the weekend, so one might suspect that there might be some safe haven flows, but we're not seeing that now on the charts. A chart in front of me here, US West Texas crude oil prices, you can see are firmly in a downtrend. It's a daily chart here. We can see the EMA has crossed over here on the 11th of June when the 20-day EMA crossed over, went below the 50-day EMA. Stochastics are below 20 level. That is a clear bearish trend in oil prices. A similar picture with gold. Gold is clearly in a bearish trend on the daily chart. Gold prices hovering around 4,000 US an ounce. Prices haven't even been able to bounce towards that 20-day exponential moving average. So price behavior is quite weak. There is quite a band of support around that $4,000 mark. We have dipped below there at the start of the week, but we're hovering just around it for the moment. Stochastics are around the 20 level. It just further supports this bearish technical picture that we're seeing right now. We move now to US equity markets, in particular the NASDAQ. Now, last week, Bloomberg did coin the phrase chip wreck. Are we seeing AI related stocks, semiconductors, chip makers falling? There was a bit of correction last week. Was that significant enough that the charts don't say so? We can see here on the daily chart here, Blueberry's NASDAQ 100, that the NASDAQ did drop back, bounced off the 50-day exponential moving average and continued its upside. Again, Wednesday, Thursday, Friday last week, prices dipped back to the 50-day EMA and held perfectly and bounced off. So the uptrend is still intact in the NASDAQ and overall in US equities. And finally, a word for currency traders. We take a look at dollar yen, the most interesting currency pair and historically the most volatile currency pair. US dollar strength has been the story of the last few weeks. Dollar yen did break above that 160.50 level that it hemmed prices in for quite some time. We smashed through that. We're currently trading about 9 pips below 162 the figure. Now 162 the figure is holding price at bay right now. This is despite a lot of threats from the Ministry of Finance that excessive yen weakness is something that is cause for concern for them and therefore the BOJ. However, look at the US dollar uptrend, very strong, and we do have that US non-farm payrolls data on Thursday this week, not Friday, given it's US Independence Day holiday. And if that is a very strong number, we may see market analysts and participants bring forward Fed rate hikes. That's something to focus on this week. Let's move into the week ahead data. Top of mind for traders this week is the US-Iranian peace agreement. Really important to see what traffic flows are like through the Strait of Hormuz and therefore impacting oil prices, which are quite depressed at the moment. The Reserve Bank of Australia meeting minutes, we know they've paused after 3 consecutive rate hikes early 2026. Shouldn't really impact the Australian dollar or the ASX 200. We're not expecting too much out of the RBA meeting minutes. We do have Chinese manufacturing PMI data coming out. UK GDP expected to remain about 1.1%. Later on Tuesday, German unemployment rate around 6.4% expected. German inflation data to stay around 2.5%, although there's been comments recently by ECB board members suggesting that every meeting by the ECB is live. So they're certainly monitoring data to see if there are any increased inflation impacts which may cause them to hike rates. At this stage, we're seeing the ECB on hold. Canadian GDP for the month of April expected to bounce back to positive 0.4%. And on Thursday, we have key data in the United States because Friday is a holiday, US Independence Day, holiday for the 4th of July, Saturday. So The data is coming out on Thursday. The ISM manufacturing PMI is always important in the States, followed by US non-farm payrolls data. Now, for the month of May, we did see an increase of 172,000 jobs. Expectations from Bloomberg and Reuters are around 114,000 new jobs to be added. Now, this is going to be a key number because we've got US dollar strength, we've got US equity markets generally buoyed, we've got obviously a stronger dollar is hurting prices in gold, other commodities like oil, as you've seen already, and other currencies. So the question will be, how strong will this data be? If it is way outside expectation, let's say we see non-farm payrolls data of plus 250,000 new jobs, we may well see market economists and traders bring forward some Fed rate hikes. Currently, there's a 30% chance that the Fed will hike rates in the July meeting. These are market expectations. And there's a 65% chance the Fed will hike rates in their September meeting. So you can expect that this data, whether it's a lot weaker than expected or a lot stronger than expected, will certainly move that dial. So that's it for this week. Good luck with your training, and I'll see you after US Independence Day. Bye for now.